This is where we stand. The reverse mortgage industry is at a crossroads. Welcome to the Industry Leader Update. It's not just the housing market that's poised for a big shift. So is reverse mortgage lending. While industry participants typically concern themselves with potential changes to the federally insured home equity conversion mortgage program or state legislation, there is another sea change that is fast approaching the horizon. Now first, there's an old investing adage and it goes like this: don't fight the Fed. Perhaps you've heard it. In other words, a wise investor is going to align their financial decisions with the current monetary policy of the Federal Reserve. Mortgage originators of all stripes, traditional and reverse, just did that. For the last 2 years, refi transactions have been the rage because the central bank slashed interest rates, all in the effort to help stave off a deep recession due to COVID-19 shutdowns and stay-at-home orders. However, by late April of this year, after a series of rate hikes, mortgage refinance volumes on traditional loans collapsed 68% below what it was just 1 year ago. Can we expect to see the same for HECM refinances? Quite honestly, it's too early to tell. FHA's March HECM snapshot shows that 48% of HECM endorsements were for refis. In that same month of March, 40% of case number assignments submitted for HECM applications were for HECM to HECM refis. Now, what is notable is that there are nearly 10% fewer applications for a HECM to HECM refi than there was in January of this year. And that may actually be good news. In March, traditional non-refinance and purchase HECM applications accounted for 59% of case numbers. Now, that's a notable increase from January, when only 50% of HECM case numbers were for traditional and purchase applications. Now, anecdotally, that would seem to indicate with fewer refi opportunities in the market, originators have now returned their focus to finding new first-time HECM borrowers. To even the casual observer, it's quite obvious that we can expect that rising interest rates are going to flatten home values a bit, and that will splash a modest amount of cold water on both the economy, traditional and mortgage lending. However, reverse mortgage professionals, each of you watching, you have a unique advantage over the forward mortgage originator. While unfortunate, we're seeing inflation is thwarting the ability of many middle-aged Americans approaching retirement to adequately save. Now, while retirement deposits are declining, home equity will continue to actually grow because of the forced savings plan called a mortgage payment that's made each month. That is all to the benefit of the homeowner, a benefit for which they may be able to tap into using a reverse mortgage. It would be both prudent and desirable to see non-refinance HECM volume continue to grow to replace what was once a reliable source of funded loans and incomes. After all, like the seasons bring us hotter days and chilly nights, HECM refinances will become the notable exception rather than the rule. Despite rising rates and uncertain home values, our turbulent economy is actually increasing the necessity of additional cash flow and a reverse mortgage. And that is ultimately where we stand. What are your thoughts? Leave your comments below. And also be sure to share this video on your social media platforms, LinkedIn, Facebook, and Twitter. We have a YouTube channel if you have not seen it, HECM World. Just type that in on YouTube. You'll find us. Then subscribe and hit the notification bell. That way you never miss an upcoming episode. Each and every week, and we've done this for over 13 years, we have published a podcast every Monday. It gives you the most recent reverse mortgage news and commentary. Apple users can listen and subscribe on iTunes. That's a wrap for us here at HECM World Studios, and we'll see you next week for more reverse mortgage news, commentary, and analysis. Have a great week.